What is up, everybody? Welcome back once again to your favorite time of the week. It is Fed Watch. My name is Ansel Lindner. I'm here with my co-host CK. How are you doing, CK?
Doing good, Ansel. Excited to jump in and try to demystify all of the craziness that is happening in the global economy, happening with central bankers, happening in commercial banks, and the cornerstone of our financial system. It's all crumbling, and we're here to talk about it on the show. Honestly, I'd probably be a lot more nervous if I didn't have Bitcoin. So I appreciate Bitcoin for that, for sure.
Absolutely, absolutely. Well, last week was such a big week. It seems like people took this week to kind of absorb what went on the last pretty much all of March. And so we don't have like any breaking news this week, but we do have some more in-depth looks at what's going on behind the scenes. We're going to take a look at the sentiment. There's some things that are pointing to, hey, things aren't so bad. And of course, then we have a banking crisis happening. So we're going to look at that. There was an emergency meeting with what are they? The Federal Financial Services Open Committee or some FSOC that Yellen heads up, the Treasury. So we're going to take a look at what came out of that meeting, the Fed Now stuff, and then alt currencies like
A lot of confusion around Fed Now too. People think it's a whole CBDC.
Yeah, exactly. And these alt currencies are like, the BRICS currencies. Then there's talk of Argentina and Brazil starting their own currency together. So we're going to take a look at some of the history of alternative currencies in the dollar system. Is this new, or has this been going on for a long time? But if that sounds good to you guys, please like, comment, subscribe, share this out. We have a little competition
Send us some
between.
zaps.
Yeah, we have a little competition on Rumble and YouTube, which platform can be getting more views. And Rumble has been just kicking YouTube's butt. So share the YouTube lookout, get people on both sides of the house, and we can see which platform will reign supreme. But anyway, any other plugs up front, CK, before we jump in?
You guys know I have to plug Bitcoin 2023. Y'all, we're officially 49 days away from the event. It is coming in real quick. We just confirmed our boy Ansel here. He's going to be joining us on the live stream. That is going to be incredible at the event. So really excited to have Ansel involved this year. And you guys, it is shaping up to be a hell of an event. Our sales team has been making incredible progress on the partner front. So a lot of amazing companies are going to be at the event. So I could not encourage hardcore Bitcoiners that want to be a part of the Bitcoin ecosystem. This is a must be at conference. This is where you are going to be able to rub shoulders with every single person that is involved with this space. And it is getting huge. We recently dropped themes for our mining stage, for the main stage, and for the open source stage at the conference. So that's super exciting. These themes are kind of going over, what each day is going to be broken up into, and all of the sessions that kind of fall under each theme are going to fit into the theme. Some themes that we're talking about is how to become anti-fragile. What happened to the global economy? Bitcoin investing, the Bitcoin worldview, spending and giving Bitcoin, the future of the contributor ecosystem and culture. So these are like themes that make a lot of sense for what Bitcoiners really care about and what the future looks like with this asset as the global reserve currency. So we are in the future here with Bitcoin, guys. The world is still in the past. It's still in this ancient time that is fiat. And Bitcoiners are in the future. Bitcoin 2023 is a little bit of a glimpse into that future. So make sure to use promo code BMLive. Get your ticket today. I know that you actually get a legacy issue of Bitcoin Magazine, issue number 23. That is our 10th anniversary issue that we made in 2019. You can get that for free. I think it's worth over $500 of value when you purchase a ticket today. So I think we only have 100 of these available. Wow. It is a limited release. There are not many left. Claim your magazine today, or claim your magazine, get your Bitcoin conference ticket, and you will not regret it. I promise you, it is going to be a time of your life. All right, y'all, that's enough from me. Ansel, let's talk about Bitcoin and markets. I've been really enjoying your last few podcasts. You've been busy. So in between Fed Watch, you drop 2 to 3 incremental podcasts and a daily live stream. Talk to us about what you're doing.
Yeah, so the home base is Telegram. You can join that channel, t.me/Bitcoin and markets. We talk Bitcoin, macro, futurology. We even get into mining a little bit and stuff like that. And that's actually struck me with what you're saying about the conference. A lot of times people think, oh, this is just going to be a Bitcoin conference for Bitcoiners. But no, it's everybody's a Bitcoiner. There's people that run billion-dollar, hedge funds that are going to be interested in this hardcore industry with mining. I mean, it's really turning heads with what Bitcoin mining can do, and futurology. So it's not just Bitcoiners and libertarian stuff. It is all of this put together in one big package. It's actually a very, very exciting space because of that, because it connects so many dots for people. But yeah, I'm excited for that. Check out my website is bitcoinandmarkets.com, so you can follow everything that I'm doing. All right, CK, you ready to jump in the charts?
Let's do it, sir. Producer Chris, take it away.
All right, so here is the Bitcoin daily chart. We haven't started with charts here in a couple of weeks, but I thought it was important. People are confused, I think, right now. That's kind of the theme of this show, is people are confused right now with why aren't stocks crashing? Why isn't the market crashing? Look at Bitcoin. It's up near highs. It's up 70% on the year. It's being stubborn at this level. This shaded red box is, you can see where it comes from. If you go to the next slide, Chris, this is the weekly chart next, and you can see where that red bar comes from, some of the lows back in 2021, and then right before Celsius collapsed in 2022. But I did leave my cartoons on here this week for you, CK. But if we break through this area, it is blue skies above. So, CK, what are your comments on this week's price action?
A lot of resistance here around that 30K point. I remember last June when 29, 30 kind of seemed like that line in the sand. And if we could defend it, Bitcoin price would hold. Obviously, that did not happen. And once we broke 29, it was really just straight down till 16K. And really, what we're seeing now is just trying to earn those price levels back. So I'm not surprised that there's resistance kind of at that to get past 29 to get to the 30K levels. There's definitely a lot of resistance there. I know a lot of newbie friends and people who are not as in tune with the space. I remember, 2 years ago, they're like, hey, should I sell? We're above 30K. That was kind of like my exit point. And I was like, hell no, we're going all the way to 200K, guys. So, don't take a bull market Bitcoiner's advice ever. But, it right now, I can understand just heuristically, anecdotally, why there's resistance here. And you can see it on the chart. Once we, break out of here, and I'm hoping it happens soon, who knows what's next. There is a lot of assumptions that there's going to be, there's not going to be another hike next time around. So if that is true, that would probably bode for higher Bitcoin prices.
Yeah, but I mean, Bitcoin has been going up despite the Fed's hiking cycle. So I think there is, it's harder to make a bear case actually for Bitcoin right now. It's easier to make a bull case. But okay, let's go to the next slide. And this is continuing on this theme of why aren't markets crashing. And you can see that yesterday, the stock market S&P 500 closed above the 50-day moving average once again, and then today it gapped higher. So there is a lot of, I think, momentum behind this stock market rally. Also, if you look back at the beginning of March, that high that we're just trying to surpass right now in the stock market, that's before all of this SVB, Signature, Credit Suisse, even Deutsche Bank problems. And look, the market just shrugged it off, and they're regaining those levels right now. So a lot of people are very surprised by this. And I've been reading stories, which we'll get into one here a little bit later, but there's a lot of stories about hedge funds being like record short in this market and what happens when they have to be liquidated or close out those shorts. It's like buying long in the stock market. So there's a lot of gas I think here for the stock market going higher. Any comments on the stock market?
No comments really, other than, I think people are generally trying to get out of USD again. I think that people are thinking about, how do I buy a house before something changes? How do I get into property? How do I get into things like Bitcoin? I think people are nervous about banks, which is hilarious because money in the stock is not safe by any means. It's just as vulnerable as money in the bank, really. So yeah, I mean, I think that Matt Odell likes to say mandibles, 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 and in the mandibles they kind of talk about as these systems break down, assets will continue to get speculated on. And again, you've been calling for a pivot. The real rates have been going backwards and against the Fed funds rates. And everything is really screaming, things are about to change in the bullish direction for assets.
Yeah, you said something there really interesting, and I don't want to confuse the theme of the show, but we are going to talk a little bit about these alternative currencies at the end of the show. And you said something that people want to get out of the dollar. They want to kind of diversify, but it's also this kind of searching for monetary value in places, searching for yield again, things like that. So I think that's a very important thing that you hit on there. But let's keep going on some of these other charts. I do have one of the dollar if they're trying to get out of the dollar. And that is actually, let's do yields first. This is one of your favorite charts. Yeah. And I want to point out the black line here. So these are all like kind of longer dated treasuries. The black line is the 10-year, then going vertical here, going up, the 5-year, 30-year, and then the 2-year at the top. But you can see this black line. It has been about this level since December. It's been here for a long time at 3.5. It's at 3.56, I believe, this morning. And it doesn't matter. It's kind of indecisive. Like if the market was really doing well, we would see rising interest rates. This goes back to the interest rate fallacy. So if you have profits are going up, businesses can afford higher interest rate payments. And so interest rates will go up in good times. But in bad times, interest rates fall because people can't service their debt, as well as banks not wanting to lend to people's. And we've covered some of that data here on the show. But overall, if the rates are going sideways for 4 or 5 months, that's kind of indecisive. Is the market actually, are we going to have a recession, a hard landing, a soft landing, no landing? That's kind of what this 10-year is telling me. Any thoughts on your favorite rainbow chart here, CK?
The Fed is not in control. This proves it. That's all I have to say.
Good point. Okay, now we can go to the next one, and this is the dollar, and you can see it's red on the day today. It's falling. It's fallen further than I thought it was going to fall. But at the same time, looking at this chart, if we have a banking crisis where people are rushing into the dollar, they're trying to get their hands on the dollar to service their debts or whatever, the dollar would be going up, not down. That's why Brett Johnson, Jeff Schneider, myself, and others that are in this kind of strong dollar camp, the end of this system is a stronger dollar. It's not a weaker dollar. So when the dollar's falling, a lot of people, it reinforces their thought process saying, oh, look, the dollar's weakening. There's de-dollarization happening in the world. This is the end of this era, the dollar era, and we can see that with a weakening dollar. But that's not what I see when I look at this chart. I see that the banking crisis is contained. I don't want to say that really, but the banking crisis is been alleviated or abated for the most part at this time. And this weaker dollar says that to me. So CK, any thoughts on the dollar? Am I completely ass backwards on this or what?
I'm interested to see how that statement plays out. you're known to take a more nuanced perspective on central bankers than like 95% of Bitcoiners.
Yeah.
So, you saying that the immediate fear and crisis has been contained is definitely something.
Strike that from the record. I'll say that it has been abated for now.
Yeah, sorry, it's been abated. It's been abated. They've successfully kicked the can down
Yes.
the road a little bit longer. I'm just kind of curious, what do you expect next? Do you expect dollar up again, or do you expect it to continue to creep down as people, buy assets?
I mean, kind of medium term. So talking 6 months to 2 years out, I expect the dollar to creep higher because um, I don't expect another dollar wrecking ball in that period of time. But after the, maybe a 2 year mark, we could see another dollar wrecking ball. This is because like human behavior is pretty predictable. When the dollar weakens, what do the emerging markets do? They load up on dollar debt. So this is a obviously predictable cycle. The dollar strengthens, there's defaults, there's crises. Then when the dollar weakens, they load up more on dollar debt, and we go through the whole thing again. So I think the dollar over the medium term will continue going slightly stronger, but like I said, no dollar wrecking ball in that period of time. That's what I'm seeing.
All right, should we jump to commodities?
Yeah, let's go. This is the last couple charts here. I pulled out a commodity index because you guys know me. If you're fans of the show, I push back on the inflation narrative. And so this is the Goldman Sachs Commodity Index. It's a broad basket of a bunch of commodities, obviously. And you can see that we topped out back in early 2022, and it has been fairly down ever since. So if the dollar were being debased and going away and threatening to go away, we would see much higher commodity prices. If you go to the next slide, this is the longer term chart that includes the great financial crisis. And you can see that went much higher not much higher than we just did, but we had the worst supply chain crisis since World War II, and commodities didn't even break the high from back in the great financial crisis. Also, the period between like 2011 and 2014, that was at a higher level than commodities are right now. So over the long term, commodities have trended downward until COVID with the supply chain crisis. So we'll see how this turns out, but I'm not expecting like if the dollar continues to gradually strengthen, commodities should continue to gradually go down. So any comments here on the commodities, CK?
So commodities going down, dollar strengthening. We have the questionable cooking in the comments saying strong dollar is bad for the corn. How do you square commodities going down, dollar strengthening, but Bitcoin also going up?
Because of the reason the dollar is strengthening. So the dollar is strengthening because of credit crisis. Because credit, the productivity of credit is going down. The debt burden is going up. We're trying to get out of a debt problem by adding more debt, and that doesn't work. And the end of a credit crisis is deflation, not inflation. So the dollar should strengthen, but the reason why is because we're in this credit crisis. So we have a monetary shortage out there. People's debt burdens are higher than the productivity of new debt. So they are going to search for a monetary alternative. And that's kind of what we were talking about there just a minute ago, with people trying to, get out there, get into a house, get into some other properties, get into some other assets before it's too late. And that's very similar to the bull case for Bitcoin at this time. It's a alternative. It's a very specifically a monetary alternative. And if you look at things that have monetary properties, they usually strengthen in these times. Look at treasuries, okay? I had this conversation on Telegram this morning. So treasuries, I consider money-like or very near money, because they are a store of value and they are a medium of exchange for, to a high degree. However, in bad times, the price of the treasuries goes up. The yields drop, price of treasuries goes up. People are fleeing into money-like assets. Gold will go up, Bitcoin will go up, treasuries will go up, the dollar will go up, all of that all together. So that's how I'd explain it.
No, I appreciate that a lot, and I think it helps the audience as well. So thank you.
Absolutely. Okay. Are we any other comments on the charts, or should we go into the first kind of article here?
Let's do it.
All right. Let me bring this up. And this was an article here on Zero Hedge, as you can see there. I did archive this. And for all the people that are listening live and on the podcast version, I do a post on bitcoinandmarkets.com for each FedWatch episode. I have all the charts we talk about, all the links that will all be in that post. So you can check that out. Also, we're trying to get it on every podcast app in the little description, a link to that post, or also any of these links that we can fit in there. So check out the description or bitcoinandmarkets.com. All right. So why are equities holding up so well? JP Morgan answers the question everyone is asking. One of the more frequent laments among Wall Street traders these days, where sentiment has turned from mere doom and gloom to outright apocalyptic. And according to the latest Bank of America fund manager survey, the majority of Wall Street professionals now expects a systemic credit event emerging unexpectedly out of the shadow banking sector. Is how it is possible that after everything that has happened, our stock not only what is this? Am I confused here? Our stock not only lower. Oh, Jesus Christ. Our stock not only, okay, you guys can read that. Let me continue on a little bit further down the article.
It's double negative. It's not only not lower, but it's actually rallying.
Okay, I was getting backwards there. Sorry, guys. I can read. Mike Wilson, he put out a note. I think he's from Morgan Stanley. Why on earth did U.S. stocks rally last week? And also, another. I'm flailing here, CK. You might have to save me on this. But let me go forward to some of the charts that they include on this. Chris, if you can go to the next slide. What this article ends up doing is breaking down some of the things that are actually positive, where everyone is caught into this bearish narrative, this bearish sentiment. We have a credit crisis going on, or a banking crisis. What are some positives? And here in this one, they're showing that the positioning is very bullish. As we discussed earlier this week, according to the JP Morgan positioning intelligence team, hedge funds remain short, and that we are seeing an increase in leverage. While hedge funds have slowed their demand for mega cap tech names, ETF purchases continue to push positioning higher. 60-day flows are now only slightly positive after having been negative in 2022 Q4. So you can see this blue line is net short. What happens when they go positive? They have to sell their short positions and go long. That's going to be extremely bullish for the stock market. If you go to the next slide, CK, you can just stop me whenever.
This is great. This is great. Wreck the shorts.
So on this one, they include this in this article here. And you can see that household savings exploded during the pandemic, causing havoc in the labor market. We talked about this ad nauseum back last year and in 2021. But there are still massive amounts of excess savings, quote unquote, excess savings, checkable deposits in the system. If you go to the next slide, this is a little bit more updated chart. It is trending downward now, but you can see that there is still a massive amount of money that is stuck in savings. Next slide. This is another positive thing for markets. So household debt service payments. If you go to the next slide, Chris. Household debt service payments as a percentage of disposable income. And look how low it is. This is pretty low for people's amount of debt service payments that they have to make. Now, some of this could be artificial. I don't know exactly what goes into this, because there were a lot of deferments, during COVID, and a lot of those are now ending. So we'll see if this goes up. But overall, households' debt load is very low. And if you go to the next slide, I think this is the last slide from the article. So percentage of outstanding credit card balances at least 30 days overdue. And look at that. Look how low it is. It is some of the lowest in the last 20 years. That means that people are able to pay their credit cards. People are not getting into debt trouble right now, which is pretty amazing. Maybe it's because they tightened their belt so much during the quote unquote inflation or the high CPI periods. But we're seeing a lot of room to expand in households deploying excess savings, deploying, credit card debt, deploying these other things. And that is just net positive for the stock market. And the last slide I have here, CK, before I get your input.
This is contrary to news I've heard around, sorry, I didn't mean to interrupt, but it's contrary to news I heard about like increasing credit card utilization and that being at highs. So I'd be curious to double check into, the reports I heard on that side.
Well, it might be that credit card usage is high, but they're not 30 days overdue. So they're still able to make their payments. That's maybe a distinction there. Okay, and then on this last slide here, this is the estimate from the Atlanta Fed. It's called GDP Now, and I've talked about this before on the show, but you can see it's at 3.2% real GDP for Q1. That's their estimate. Now, they could miss, of course, but I don't think they're going to miss by 3%. I don't think Q1 real GDP is going to be negative. The economy is expanding. How it's expanding, exactly what the nature of the expansion is, we don't know. But it is expanding, and it's not as dire as people are out there saying. I know that there are banking failures, which is the contrary thing here. We have banking failures, and you have good economic data. Those are the two different conflicting narratives here. Okay, CK, any overall comments on this story? You're muted.
Am I there? Hey, sorry about that. Yeah, no comments really. There's a lot of confusion. I think it's really hard for people to grok like all the conflicting narratives. Again, even the smart money, the hedge funds are net short, is what you're saying. So yeah, I mean, again, I would say if you zoom out all the way, this is why Bitcoin, because we have such a horrible and opaque system. It makes it really difficult for people to make good decisions. But when you zoom in and you're just living in it, even the smart money could potentially be 100% wrong, right? With leverage.
Oh, yeah.
So it's really tricky out there, y'all. So it's just best to stay humble as much as possible and try not to get over your skis.
Yeah, and another thing that Bitcoin gives us is something to hold. So if there's uncertainty out there, like you said, people are trying to get out of the dollar and get into different assets. Well, in the past, you could stuff money in under your mattress, right? And you could save in actual hard currency, and that's what Bitcoin is. So Bitcoin gives us an alternative in this crisis, this monetary hurricane, if you will. But okay, let's ready for the next one?
Let's keep ripping.
All right, we're zipping through these. So financial, this was the, actually, do we want to bring that up this screen yet? Let me just read through this here, producer Chris, before we get into that screen. So let me bring this up on my end. This was a Bloomberg article, and I'll just read some of this. Yellen calls Friday FOMC meeting after banking sector turmoil. Regulators seeking to calm markets, depositor concerns. The FOMC members include leaders of Federal Reserve and FDIC. Treasury Secretary Janet Yellen will convene the heads of the U.S. financial regulators Friday morning, that's last Friday, for a previously unscheduled meeting of the Financial Stability Oversight Council. The meeting will be closed to the public, the Treasury Department said in a statement. The Treasury didn't say what time the meeting would begin, and it wasn't immediately clear whether the council would issue a statement following the meeting. The step comes as regulators continue efforts to instill calm in the financial markets and among bank depositors, following the recent failure of two mid-sized lenders in the U.S. and the near collapse of banking giant Credit Suisse before its government-brokered takeover by rival USB Group. Okay, so now we can go to the statement there, Chris. Sorry about that. Yep, next slide, Chris. Thank you, sir. So this is what came out of this Financial Oversight Committee meeting, and I'll read a little bit of this. During the meeting, the council heard a presentation from staff of the Federal Reserve Bank of New York on market developments. The council discussed current conditions in the banking sector and noted that while some institutions have come under stress, the U.S. banking system remains sound and resilient. The council also discussed ongoing efforts at member agencies to monitor financial developments. Okay, so my takeaway from this is that they kind of freaked out. There was a bunch of stuff going on with these bank failures. They called this emergency meeting just in case something came up over the weekend, and then they could address it, because 2 weekends in a row, stuff did come up on the weekend. So they called this meeting to try to get ahead of the market, quell any sort of concerns that were still there. But overall, nothing happened on the weekend, so they didn't have to make any big announcements, create any new policy tools, do any of that. So, but this is still a counter argument for, hey, everything's okay in those charts that I just showed you. Everything's not really okay if they're calling emergency meetings. So, CK, any comments on this story?
Yeah, I mean, again, I think even if the banking crisis, quote unquote, has been quelled for the time being, and we will be able to kind of continue as we've been going for a little bit longer before another shoe drops. I just think that the way that Yellen in particular has kind of managed the psychology here has done nothing but diminish her credibility. I think her questioning and her testimony has looked very weak. I think her flip-flopping on such a massive thing as we are going to insure all deposits or not has made her look very weak and indecisive. And then these emergency meetings are also not helping in any way. So again, I don't want to read too much into it. I wouldn't be shocked if they have emergency meetings for the rest of the year. But at the same time, whoever is working on her PR, it's not looking good. And, Nolan makes a great point in the breakup, and he sometimes hosts this show, or co-hosts this show with you. But fiat is all about decree. It's all about confidence. We talk all about forward guidance on this show, and the decrepit fiat system has gotten to the point where Joe Biden and Janet Yellen are the ones who are the ones who are supposed to maintain confidence and push forward the illusion of control and stability. I think things are looking pretty bearish right here.
Yeah, great points. Calling an emergency meeting when there's no emergency, that does not instill confidence one bit. That was probably the wrong choice there, Janet Yellen. Okay, so I have some other takeaways too. And another thing that they mentioned in the readout was the European contagion. So they see, a lot of the bank failures like Credit Suisse and Deutsche Bank having issues, that this is kind of a European problem and not yet 100% an American problem. The Europeans do not have an FDIC the same way we have an FDIC. So there's a few differences, and they're watching that very closely. Yeah. So I would I also want to tie back into some of the fallout from the energy crisis. So why are the European banks having these kind of unique problems? The big European banks. So Signature, yes, was a big bank, SVB was a big bank, but they weren't these globally systemically important banks, right? They were just big banks in the US. So why are the global systemic important banks having problems in the Eurozone? Well, they crushed their economy with sanctions and with the energy policies and with all of that stuff. So this is just a downhill ball that's rolling in Europe. Whether that, takes Europe out and then transfers over to the US or the contagion spreads within the banking system, that remains to be seen. But I just wanted to add on to that because that's our last bit of the banking system. Any further comments on the banking system, CK?
I just want to go back and say on this show, Fed Watch, we've been doing this for, probably close to 3 years now. It's been a long time, Ansel. But in that time, we have called the breakup of Europe and we've called the stress in Europe. And we've said that Europe is one of the first to, as we know it, is one of the first to break down under the pressure that is continuing to build. So bad decisions after bad decisions, they magnify each other. And it seems like that's where Europe is. We've already seen just in recent news around Europe and energy, they have all these energy problems, but yet they're not wanting to. A lot of the Western European countries are not wanting to call nuclear energy part of a green mix because they have to, lean harder on the renewables. And then France is making a coalition with the Eastern European countries to get nuclear as part of the green mix. And we're seeing a lot of anger in France. We're seeing a lot of anger and discontent in Eastern Europe, especially as it relates to Western European policies. We're seeing the cracks in Europe. Brexit was just kind of like that first shoe to fall, but the cracks are continuing to expand. And, these member states in Europe, like they're not like states like in the United States. They are sovereign nations, at least in their identity, maybe not in practice within the European Union. And there's issues there. So when it comes to FDIC insurance and things like that, maybe all of that is just saving a big explosion for the Americans later. And because that doesn't exist in Europe, those kind of pains can come front and center and much earlier. But I just really don't know if it's going to be a blessing or a curse that we do in fact have quote unquote FDIC insurance to back up these bank accounts.
Yeah, that's true. When you have tools, then you tend to overuse those kind of tools, and um, but at the same time, I mean, when you're talking about confidence of depositors, I think the FDIC is a pretty big positive for the United States. Um, and this is what geopolitics is all about, relative strengths and weaknesses. But okay, let's get into the next story. I don't have a slide for this one, but it is the Fed now. If you guys are following the news on this, Fed Now is this new payment system that the Fed is launching. It's going to go live in July. They've been building it for many, many years. It's being compared to a CBDC, or at least a step on the road to a CBDC. But what I wanted to point out was that this is not at all a new money. This is like a new PayPal for institutions to send money 24/7, 365, which they can't do at the current time. That's one reason why Signature and Signet was so important for the Bitcoin industry, because it did have 24/7 payments back and forth between banks, or it facilitated that. So now the Fed is bringing out their own system that would have, I guess, competed with Signet for these transactions, but it is in no way a CBDC. It's more like a PayPal between banks. So CK, what have you been hearing about this Fed Now thing, and what are some of your thoughts on it?
Yeah, speaking about Fed now, this is really an area where there's a lot of kind of confusion and FUD that is being generated by, let's just call it the hard money or the conspiratorial element of the Bitcoin and maybe even the gold communities. It really is clear that Fed now is not a CBDC. But with that being said, it definitely is a sign that there is more consolidation happening on, let's just call it government rails on Fed rails. So even if it's something that is becomes a meaningful tool in the United States, it's not a CBDC, but it could be that kind of next step. And it is interesting to kind of see, the coalition of banks being brought in closer, being forced onto Fed rails, not necessarily Signet rails or a private coalition of rails, but being rolled out to Fed rails, as well as the need for all of these banks in the coalition to go to the Fed window and depend on the actions of the Fed more as it relates to managing their business than ever before. So, I think that there's a little bit of truth to the confusion. I definitely think that like this idea of a US CBDC probably will never ship, especially in the face of Bitcoin's massive expansion. But I know it's kind of a two-way street. It's not what they say it is, but it is kind of like this continuous trend towards consolidating banking, towards bringing it into one house, towards making these banks and institutions dependent on bailouts and government action to continue to operate and be solvent.
Yeah, great points. You made me think there about Tether and how Fed now would kind of be like a Tether. One reason Tether is very useful for people is because they can ship dollars back and forth between exchanges and they can do arbitrage trades and things like that. Is Fed now going to compete with Tether? I don't know. That's an interesting thought because yeah, it's not a CBDC. It's just a payment rail. But if they have the dollars and they add a payment rail, where see Tether has the payment rails and they added dollars. Now the Fed has the dollars and they added payment rails. So it's kind of like a Tether competitor. Am I way off on that, or what do you think about that?
Yeah, I mean, again, this idea of a CBDC, I personally don't think it will ever ship, but I think you're thinking about it correctly. It's really they're laying out a payment network, and I don't even know what the rollout is going to be like, or if it's optional, or is it something that's mandated for these banks to leverage. But if it is this, kind of mandatory thing that they're all onboarding onto, they're really they're getting all the banks on Zelle. They're getting, we have access to Zelle, but like for their internal operations. And to be honest, I'm not necessarily a banking systems expert, so it's difficult for me to compare and contrast to what exists. But my assumption is that something like this that unifies the American banking system probably doesn't exist
Yeah. All
outside
right.
of wires, but everyone knows how terrible that is. And,
Yep.
this could improve the UX of, banking users just because maybe because of these integrations, if I trying to send you fiat, Ansel, and you aren't part of your bank is not part of Cell, your credit union is not part of some sort of instant platform, if I could get around writing you a check or sending you a wire, that would be a massive UX improvement. So maybe this is just a UX improvement and that's it. It's benign, but on the flip side, a lot of the times the expansion of centralization, in my opinion, is one, it's not necessarily planned, it's just kind of organic, and it happens in these kind of like slow, logical, iterative steps where
Mm-hmm.
it's like at no point on the route where people are like, hey, we're going to deploy a full on CBDC, but as things kind of logically played out, it just kind of got you to that next logical level to take it to the next stage.
Yeah. I agree. I think that this is, well, one of the things I've read about this multiple times is that it solves some of the things that a CBDC would solve. How to deal with digital payments without ditching the old system and having a whole new currency, which is what a CBDC is. This is kind of halfway there. But at the same time, it's important to stress, like the commenter said, that this is not a CBDC. It's not a new form of money. It's just a new PayPal. So, all right, let's go on to the last topic. And let's pull this up. It's going to be slide number 16, please, Chris.
Let me just emphasize one last point, which is that
Yep.
we maintain the idea that what is happening is hyper-dollarization and then hyper-Bitcoinization. And both Ansel and I are bearish on the ideas of the creation of new money in the form of CBDC to replace existing dollar fiat.
Oh, yeah, definitely. I mean, a CBDC is going to be hyperinflationary, I think. So we need to stay away from that. And that's another reason why I'm bearish on Europe. And Europe, I think, is on the back foot when it comes to all of these things, because they're being forced to go down the route of CBDCs because no one wants a digital euro. They all are getting on Tether dollar. They could get on Tether euro, but they're not. They're using dollars. So, okay, let's go on to this next one. It's kind of in that similar vein. I saw this tweet yesterday or 2 days ago, and here we go. Never heard so much about countries looking to begin a new currency. I also have never paid attention in my life. My experienced friends, and then he asked some people, are these normal, or do they happen on a regular basis, or is this completely new? And what he kind of quotes here is Brazil and Argentina start preparations for a new currency. And I did respond a couple down. Lawrence Lepard responded, then I responded to him. But if you go to the next slide, Chris, this is just a paid, Wikipedia entry of proposed currencies last century, in the last 100 years or so. And you can see that it's not unusual. There's even in the 20th century, if you look in there, gaucho, that was between Argentina and Brazil, exactly what they're talking about today. And that was back in 86, 87. So how many years ago was that? Not even, that was like 30, 35 years ago. They were talking about the same thing. But you can see every few years, there's a new currency being talked about. So this is not new. This de-dollarization narrative that we hear over and over and over again is not new, guys. It has been going on forever. Think about why why we went into Iraq when Saddam Hussein was going to trade in euros. There has always been talk about going to a separate currency, doing something different throughout the last 50, 75 years. But every time it has come to not. And this is just another example of that. It's gotten, a lot of attention because of this multipolarity in the world that we're kind of going into. People think that there's got to be some other fiat currency that we can go to. But guess what? We're not going to go to a fiat currency. We're going to go back to a commodity currency. And my opinion, and I think CK, you'll agree with me, is that the new commodity currency of the 21st century is Bitcoin. So any thoughts on this kind of alt currency stuff?
I think that the dollar and Elon Musk and others have tweeted about this. The U.S. government, the surveillance and the enforcement that they leverage a weaponized dollar system to do. It's making the dollar just unworkable as a store of value, as like a sovereign asset that these countries can hold. So while the dollar is maintaining its kind of like dominance in terms of growth, and in my opinion, killing other fiats around the globe, it's going to continue to have these pretty significant weaknesses stem to the fact that it's just attached to America and American political interests. So I think now that Bitcoin exists, now that there is a workable digital alternative to build an economy on top of, that more and more of these rumblings will turn from, hey, let's create the new gaucho between two countries that have historically had terrible currencies, to let's just adopt Bitcoin because the dollar is unworkable. Let's adopt Bitcoin. And I think that that's just going to happen organically. So I personally, like you said, these conversations around a new currency, they've always kind of like risen up as crisis hits the dollar, and crisis will continue to hit the dollar. But what I'm excited for is the eager and excited suggestions and moves from these countries to actually just adopt Bitcoin as a common standard rather than create something new, roll their own, which is what is in vogue right now. We're seeing China go on a PR stunt, and tour rolling their own trade deals and leveraging the yuan and whatever they plan to continue to do. But ultimately, it's just more fiat.
Yeah. Speaking of the yuan being used in international trade, you saw the France deal with LNG.
Yeah.
So France agreed to buy LNG from China in yuan. Now, why the heck wouldn't they pay in euros?
Yeah, I mean, I think the the euro is probably compromised just in the way that the dollar is politically compromised too.
Yeah, absolutely. Nobody wants the euro. I will never believe that the dollar is going to collapse unless the euro has collapsed already, because that is the complete dirty shirt in the global financial system. So, anyways, all right, that's all I have. Should we end it early today, or do you have any other topics to bring up here, CK?
So much interesting stuff is happening. I think there's gonna be a little bit of a quiet before the storm, like Ansel said. Hyperinflation in 90 days, as per Balaji's prediction, I don't think is super realistic. But things are crumbling underneath us right now. So this is the time to pay attention. This is the time to try to position yourself as much as possible, because more shoes are going to drop, in my opinion.
Yep. All right, guys. Thanks for joining me. Check me out at bitcoinandmarkets.com. Check out the Telegram, t.me/Bitcoin and Markets. And follow me on Twitter at Ansel Lindner. CK?
Come to Miami, meet up with Ansel and I in person. We're going to be at the news desk. We are going to be broadcasting and talking Bitcoin, and hanging out with all the amazing people there. So the good news for the conference never ends. It continues to compound. 49 days to go. It's going to be the ultimate pilgrimage. Use code BMLive to save 10% off your ticket. See you guys next week.